and particularly the journey of a UAE fintech startup and how that environment is compared to other parts of our region and also other parts of our world. It's a very exciting conversation. I believe we have a really, really fun and dynamic mix of regulators, zones, investors, and startups. So it'd be lovely to see. I look forward to having that conversation, seeing the perspective from each one of those vantage points, all looking inward at an industry which I believe has actually become even more important in the last few months in light of COVID, the silver linings, one can say. And so I am very keen to, very happy to be having this this conversation today. And so without further ado, I will very quickly first introduce briefly my lovely panelists. We have with us today Vishal. He's a Financial Services Regulatory Authority Manager. Ken, Associate Director at Dubai Financial Services Authority. Craig, as the entrepreneur here, founder and CEO of Beehive, and Basil, general partner at Global Ventures. I'd like to hand over and give or allow every one of you to also please give a little bit more of an intro and background about your respective organizations and roles. Vishal, should we start with you?
Sure. Good evening, everyone. First and foremost, thank you, Flatix Labs, for the opportunity. My name is Vishal Sachindran. I'm part of the Financial Services Regulatory Authority at the Abu Dhabi Global Market, which is a financial free zone in the Emirate of Abu Dhabi. We are coming up just a little over 5-year-old financial free zone. We have been set up in 2015. With the focus on the wealth center of the country. We've been focused on asset management, wealth management, and private banking over the last couple of years. We also had a very early and regulatory approach towards innovation, and we can speak a lot more about that during this next hour.
Thank you, Vishal. Ken?
Thanks, Tina. I'm Ken Coghill. I'm with the Dubai Financial Services Authority, and we're the financial services regulator for all financial services activities in the Dubai International Financial Center. We're the financial free zone in Dubai, so the counterpart to ADGM. The DIFC was started in 2004, so it's 16 years running now, and all the different financial services that operate is essentially everything except retail banking. So private banking, wealth management, variety of forms of lending, and we have a number of different programs that support innovation in FinTech startups and looking more at reg tech and variety. So we can talk more about that during the session.
Thanks, Ken. Craig? You're on mute.
Okay. Good afternoon, everybody. So I'm Craig Moore. I'm the founder and CEO of Beehive. Beehive is a Dubai headquartered digital SME lending platform. So we started in the region back in 2014. We're focused on supporting SMEs within the UAE by connecting them to both retail, professional and institutional investors over our platform. And since 2017, we've been regulated. We're actually regulated by the DFSA and headquartered in the DIFC free zone, of which Ken just mentioned before. So again, I guess as we go through this panel, I can talk a bit more about our experiences and journey so far. Thanks.
Thanks, Ken. Last but not least, Basil.
Thanks, Dina, and thanks everybody. And sorry for being a bit late and getting this started late. So from my side, I'm the general partner at Global Ventures. Global Ventures is a VC firm headquartered out of Dubai, but with offices in Abu Dhabi, Egypt, and Saudi Arabia. We invest in Series A, Series B type of companies. looking at a broad spectrum of technology industries, if you like, of which fintech is one of them. We've been, I think, one of the most active investors this year in fintech, with a portfolio now of nearly 9 companies in fintech alone, out of our 26 total investments. And just to to kick it off, I think this year fintechs have really come into their own in the region. Just seeing the number of startups, the acceleration that's happening, the traction, whether it's places like Beehive, Craig, and the work you guys have done to build out an SME lending platform, but also across the board. So excited to have this discussion, and happy to share what we see as an investor and where we think opportunities might be.
Super. So let me now, we'll have a bit of a conversation, and then we can open up. We've already received quite a few questions. So I think first thing I'd like to ask would be the regulators. Ken and Vishal. So first, I think a question that we've received a lot is, what does a financial free zone mean? Does it mean that a startup registered in DIFC or AVGM cannot transact with the UAE? Does it mean that they can transact within the UAE in certain manners, but not others? So I think a lot of our viewers are very keen to understand, how do these financial services zones operate?
Sure, I can take the first stab at that, and Vishal, you can add on anything that I miss. The basic premise of the free zone is that we operate under an English common law system. Yep. So the UAE operates under Sharia law, and there is a 51% local ownership requirement, which is the other key yep. issue onshore.
That has changed recently, right?
That is changing, yes.
Yep.
So in the free zones, the important point for the last 16 years has been you could have 100% foreign ownership if you qualify to operate in the free zone.
Fantastic.
And then you would operate under the commercial law transactions would be governed under an English common law system. So in the DIFC, we have our own legal framework and our own English law court system that operates. So those are the two significant differences. It does not mean that you can't operate in UAE proper if you're operating within the DIFC. Most of the firms, and Craig's being one, for example, does business with onshore clients. And I use the term onshore loosely because we are onshore. We're sitting in Dubai. Yeah. But there are certain requirements that you have to meet to engage with clients across the two different jurisdictions, but you're not prohibited from doing it. And it can be a complex operating environment because there are different laws onshore as to how you engage with clients versus the rules and laws that exist in the DIFC. But it is certainly not a prohibition that would effectively defeat the purpose of having the center. And it is an international financial center, so it's about engaging globally and locally as well. And I'm sure Craig would have some more insight into what some of the challenges that are involved in doing that, because there are two legal systems, two regulatory systems that you do have to be aware of and deal with, which can be complex. But it's quite a broad question, and if there are other detailed questions, we can answer those about what it means to operate between the two. But it is about operating in the center and out. Key differences are ownership difference and the legal structure.
Okay. Vishal, anything to add?
No, Ken has answered that quite well. Just want to add one point that I want to emphasize on the fact that it does not restrict you. That's the main thing. Unless Ken mentioned the right to start. Retail banking. That's something that there are federal restrictions for financial free zones, but it is not a restriction. I think there are more avenues and there are more opportunities setting up the financial free zone for international players to come and set up over here, because it's a jurisdiction and it's a law that they're more comfortable with from their perspective, as opposed to the Sharia law. So I think that is the main attraction for international firms to come set up here. Apart from that, I think there has been a lot of resilience. It's not the right word. There's been a lot of resilience would be the right word. It's more about them being unsure of the complexities that Ken mentioned, and if you have clarity, if you know what you're doing and you have those conversations with your compliance consultants, with the regulators such as us, we would give you the pathway. We would tell you the glide path, how you get set up here. And I think as regulators, we have had a better opportunity to being able to get in touch directly with the startups as opposed to many of the other jurisdictions.
Fantastic. So Vishali, actually, you is a fantastic end of statement for what I have to ask next, which is regulators, but also attracting the right caliber, both for you and Ken. I mean, it's such a very, very fine line that you guys have to walk, because at some point as a regulator, a big part of the job is how to create governance, how to create oversight, how to create supervision. And in many ways, it's not just that, it's how to create systems that safeguard the public against any fraud or illegal activity. However, on the flip side, you guys are always very keen to be innovative. You're competing. I mean, UAE has at large has definitely positioned itself as a leader in terms of attracting fintech startups. So how does a regulator balance those two, between wanting to attract innovation and to provide innovative solutions for the public, but then also the safeguarding aspect of the job?
It is, Ken, I'm going to take a stab at this one. It is more to do with getting the right people.
Okay.
I remember in my
People
previous
in terms
job,
of regulators or in terms of the entrepreneurs?
within the regulatory team, your teams.
Okay. Right.
You know, when I've been in this region my whole life, born and raised here, you know, before when you talk to innovation or you want to talk anything that revolves around the software, you're directly pushed to the IT department of any corporate. It doesn't matter what it is. If it's a bank, it's a financial institution or non-financial institution.
Right.
And slowly we see those changes, right? Because now you're seeing the fintechs. Initially it was disruption, then it moved into collaboration, and now we're looking at another level of where they're going to go with it. When they started coming on board, you start realizing that, okay, fine, I don't understand this part. There are risks here that cannot be mitigated by my standard knowledge of my rule books. These guys don't care about your rule books. They're coming in with technology that is going to blindside you. You have no idea what they're coming with. So we had to change our models internally, where it is not just standing behind the wall and saying, "Ooh, I'm the regulator, I'm not allowed to talk to you. Go speak to a lawyer who can come talk to me and then get these things together." Now we're like, tell me what you're doing. Let me see what the risks are. And the technology, I don't quite get it. So I need to start hiring people within the regulatory teams who understand that technology. So there are members in our team who know blockchain, who know the cryptocurrencies, who understand APIs, who are building data governance models to make sure that they can explain to us, the more traditional regulators, what that mindset is. This is where the risks are. So this is what you should be looking for. And they will even call them up and say, nah, these guys are trying to play you. So make sure that you don't fall into their trap. You know, it's not innovative over here. So I think getting the right mix of understanding the business models, understanding the regulatory requirements, and understanding the right IT infrastructure that these guys are leveraging is important for us to make a decision, for our senior management to make that decision going forward.
Okay.
Yeah, I'll take a slightly different view to that in the same vein. We have to keep focus on what our objectives are. So we just have to remember that as the regulator, our job is to facilitate the innovation, but we're not the ones who are making the innovation. So it's the innovators are coming up with it. People like Craig who come up with the innovation that the market needs, the market wants, and develop it. But then we have to look at that through the lens of what's our objectives. We're here to continually protect the clients and protect the integrity of the market. So we have to make sure that whatever innovation that comes to market, it's protected. The users are protected, and beyond that, we have to make sure that users are comfortable using it. So it's not a matter of us just stepping aside and allowing it to build itself. We have to continually monitor it as it grows, so that clients and investors like Basil are comfortable using the product, investing in the product, and knowing that someone's monitoring it. So it's, from a regulatory point of view, it's innovation, but not innovation at all costs. So it's not there isn't an objective formula to look at how much innovation can we allow to happen with around the edges of the regulation versus how much risk can we allow. It's not so straightforward, but we have to keep view of what it is our objective is, who we're protecting, and can we continue to protect them with this type of innovation. So with uses of blockchain and such, blockchain it promises to disrupt traditional intermediary functions. It's still a nascent technology. So regulators are looking very cautiously at it's very simple to say, well, this is better. You can self-custody in a key that takes out the traditional custodian, reduces costs, makes transactions faster for clients. That's great from the commercial point of view, but what does it do on the other side of it? How protected is a client's investment, his funds through a blockchain function? How protected is his asset in the end through a public and private key distribution and housing on a distributed ledger technology? So oftentimes regulators are seen to be moving a little bit, moving too slow. I'll say a little bit, just moving too slow generally. But it's taking a measured approach, making sure, one, we understand what it is, making sure, as Michelle says, we have the right resources on our end to be able to supervise these new types of technologies, which in many ways are delivering the same products. They're just doing it through different mechanisms. But that can change significantly how we look at them. But at the end of the day, our objective hasn't changed. So we're constantly looking at, are we moving at the right pace against the additional risk that this might be adding to the users of that service?
Mm-hmm. Awesome. So I'll move to Craig, but I would like to remind our viewers that they can post their questions and I will present them to our panelists at the end of our talk. And there will be a poll just before we start the Q&A for the viewers as well. So Craig, moving on to you now. Did you mention you've been regulated by DFSA in 2016? So it's been 4 years now.
2017.
So 3 years now. When you thought of Beehive, did you? I mean, as a founder, did you think, you know what, I'm going to do it? I have this idea. I think the region needs it. I think the country needs it, and I'm going to start doing it, and then see how if I will start with some sort of an MVP and then start getting regulated, or from get-go, did you think the way to do it is to seek the regulation?
No, so I would say a bit more of the former. And so even though we launched in 2014, I was engaging in the market from early 2013.
Right.
Then nobody was using the phrase fintech in the region.
Yeah.
The whole concept of fintech at that time, people were focused more on logistical technologies and the creams of this world.
Right.
So, and Basil will be able to tell you, but investment tends to go in phases. So there's certain hot buttons, and nobody was really talking about fintech back in 2013. So because of that, when you're bringing a new business model into a new market,
Mm-hmm.
I think what you've got to do is you've got to try to set up your operations, your approach in almost a self-regulated way. So you're doing it in the best possible kind of operating model. We took the UK FCA had about that time just brought out regulations in the space that we were looking to operate. So we implemented a lot of those that we could. Mm-hmm. So we were self-regulating as much as we could. But there was nothing on the horizon with any of the regulators. ADM was just in its infancy. DFSA weren't looking at that time, as I said, because it was very, very, very new, and neither was the central bank. So we took an approach to very much, let's set it up in the right way, let's self-police ourselves. And then we reached out, and I think we had our first conversation with the DFSA probably back in 2015, just as a kind of show and tell, so they could understand what we were doing, and similar with the likes of the central bank. And as long as people were confident that we were doing things in the right way, then they just kind of kept in touch with us. But there was no way that regulation was going to be brought out within 3 or 6 months of us launching. Yeah.
But then that was a risk, right? So you chose to set up, hopeful that the regulators would, because there wasn't, at the time when Beehive launched, there wasn't another peer-to-peer lending platform regulated in the UAE. Is that correct?
That's correct.
So you took a risk, right?
Sure.
But how was that a calculated risk?
So two things. I think, first of all, you take any risk when you set up a business. If you're trying to set up a new type of business that you believe ultimately will become regulated, whether that is finance, pharmaceutical, etc., the predominantly heavily regulated kind of areas, then you're taking a risk. But I think the other thing that made it a calculated risk is that we were focused on helping SMEs, and there was a general acceptance in the market that SMEs were being underserved by the banks.
Right.
So if you think about anything, there was almost a bit of right on our side, if that makes sense, because I think if we'd have launched as a consumer lending platform, we probably would have got a different response. But because we're trying to help a part of the market that many commentators identified as being hugely underserved, there was a general acceptance that they needed innovation in that space in the market in order to drive better financing options for SMEs.
Right. Okay. So Ken, how would have that process happened within DFSA? Like how often do you get, and also as ADGM, innovative solutions that haven't been licensed before? And what would be the process to legalize it and license it? I mean, as a thought process from the regulator's perspective, just for the other fintech startups out there.
Yeah, the first step is to engage with us. And we get this all the time. There's no limit to the number of the types of innovation that could be going on right now. Entities will reach out to us and say, "Here's what I want to do." They either know where it fits in the regulations, or they don't. And we have a look and determine whether they do or they don't fit in. And it's an ongoing conversation. There are, in some cases, as Vishal had mentioned in the beginning, there are some instances where us as a free zone, we are not going to be able to accommodate. We won't be able to create rules that will accommodate it. There are some federal prohibitions that prohibit us, retail banking being one of those, and there are some restrictions around the use of the dirham that we can't get around. Aside from that, it's through engagement, and it can take a while sometimes. It can take years. I'm not going to lie and say in a couple months we can do this quickly. It takes time to understand how it's being used, and we like to understand if it's being offered anywhere else. I can speak for our jurisdiction. We don't have the appetite to be the first mover. We're not interested in raising our hand and saying we were the first to do this. There are too many other jurisdictions who have gotten into had too many difficulties by doing that. Yeah. So we don't. But the advice to the entrepreneurs on the call is reach out. We're happy to have the discussion. It doesn't mean we'll always give you the answer you want today or tomorrow or next year, but talk with us and see what can happen. It's useful to do it because we simply don't always know what's being done. We don't always know the technology, what are being done, the products that are being offered, and crowdfunding was something that was new to us. It's not something that we would fully have understood if we hadn't had the engagement with the market. We hadn't had the discussions with Craig. I know there were a lot of discussions early on with him, and there were discussions with other regulators who were already looking at it, where it was already operating elsewhere. So we do spend a lot of time doing that, but reach out, have the discussion.
Right. And Vishal, do you think if ADGM is also faced with a beehive or a first mover, does this mean that new regulations are being written as we go, as you guys are getting approached by new innovative fintech startups?
For sure, and that's the whole point of the sandbox, right? That's the whole point of having a regulatory laboratory, or the reglet that we have. And a lot of our frameworks, be it around digital banking, be it around private financing platforms, be it around cryptocurrencies, everything stemmed from there. That's what the whole point of the regulator. For us, it was not just the firms testing out their innovative solutions, but it was for us to understand what the risks were and how we can mitigate that risk and how can we develop a framework around it. Don't just look at the technology side of things, but even if you look at the VCs that had to come and play a huge part in this, we need to understand how can we help them. A lot of the fintechs, a lot of the tech startups, forget fintechs, just the technology startups, they were like, we need access to capital. The government funding is great, but we need access to more capital. And how can we attract more of the larger international regional players into the country? And this is why we try to come up with what do we see if we see risks, what do we see as risks in the business models, and we try and mitigate them to the bare acceptable minimum and try and bring them in here. So it's about understanding those business models. It's about understanding, letting them try it out and see, and we learning at the same time. We need to understand it. I mean, we can't be too rigid with our book. We can't stifle innovation. Things are moving globally, and we need to keep that open mindset to looking at new technologies as how they can actually benefit the wider population within the region. And we have a huge population. And the UAE you set up in the UAE, you have access to an entire region, the Middle East and North Africa region. So this is the best place to set up.
So Craig, you now have, and you can be honest. So you now have a relationship with DFSA. Your foot is in the door. You've established a level of trust. Do you feel that afterwards it becomes easier to create more innovation once you've developed once you've created that relationship? Like, is Beehive intending on being able to provide more financial services now that they've been able to be licensed, or do you feel like every single time you would have to do the whole process again?
No, you don't. I think once you set up a relationship with a regulator and you're being regulated, because you move through different teams within a regulator as well, and
okay.
a journey. But it's about not just building up the understanding, but also building up a level of trust, giving them comfort that if you then approach a regulator with a new approach, a new product, a new slight deviation from the service that you're providing, then you know who to go and talk to, you know how to go and have those conversations initially to test the temperature, to understand, and to also get some guidance. Right? So the regulator isn't there to say, as some of the guys have said, they're not there to tell you what your model should be or to tell you what innovation should be doing. They're there to ensure that they are kind of enforcing and imposing the regulatory standards that have always existed as they set up, and be mindful about how those flex around technological innovation, product delivery, but still holding to the same tenets. Mm-hmm. But for us, it was very much, once we've established that, it's not just within your own jurisdiction, it's about the credibility it gives you in other jurisdictions. So when we go and talk outside of the UAE, the fact that we are regulated, the fact that we've been regulated almost 4 years now, because it was early in 2017. Has allowed us to then strike up partnerships. We now have in KSA, we're partnered with the bank in KSA. And a lot of that will come from the bank taking comfort that the fact that we are regulated in another jurisdiction means we understand a lot of the unsexy stuff. And that's quite frankly what it is. When you're a startup and you're concentrating on trying to put your products in the market, regulation is something you have to do. Yeah. You don't earn any more money by being regulated in a sense. You potentially can raise more money through VCs getting comfort, but it doesn't necessarily add money to your bottom line. But what it does do is give you that credibility, so that if you do it and you go and then expand or go and look at partnership models with other financial institutions, you have a degree of credibility which puts you in a far stronger position when discussing with those banks or financial institutions or insurance companies or whatever they may be.
That's amazing. So Basil, on to you now. I've saved you to the end. So, as an investor, how do you get the comfort on fintech? And it's also a fine line for investors, because VCs are known to be the risk takers. We're the ones that are happy to pioneer new ideas. But fintech is different, right? Because fintech, you and I can go and do an investment in education and we don't worry about it. But I think the two industries that are very heavily regulated across the world is financial technology and also health technology, but that's not our subject today, but financial technology. So how do investors strike the balance between wanting to be pioneers, to catch on to the newest idea, but also safeguarding against the risks?
Well, first of all, thank you. I guess I would start off by saying that's part of the risk that's being assessed, right? So in every situation, you look at a variety of risks, whether it's the founders or the team or the business model or the competitors. In fintech, we look at regulation as also being a big part of it. Now, the journey that Craig has been on with Beehive is very different to the journey that new fintechs are going on today, because regulators are listening and at least discussing and hearing and have a more of a open mind is not the right word, but just kind of engagement level than we've seen. And this is across the entire region. But I would also wouldn't be doing my job if I would say that there's a lot of expectations on the investor side that regulators will keep moving forward. Listening is part of it. Starting to build sandboxes and put regulatory frameworks for new fintechs is a very good step forward. But the process for getting to issuing full licenses and giving fintechs the ability to actually do their business at scale is kind of now becoming more of the concern, if that makes sense, because we've seen some graduations, but there's still a lot of others that are kind of stuck in the loop of sandboxes and tight controls, which eventually need to be addressed, or otherwise investors would kind of be losing out in the time scales that they have envisioned these things to take place. And then ultimately, and I don't know if we want to touch on this, it's up to you, Dina, but open banking regulation and kind of the nirvana of leveling the playing field really becomes the ultimate question, which I know everybody grapples with, and there's plenty of discussions across the region between investors, regulators, and fintechs in that regards. But we all need to agree where we want to head to. And if we want to head to reaping the benefits of innovation in the same way that other markets have, to bring what is now across Middle East and Africa, approximately 900 million people into the financial system because they've been excluded, and to take away the profits of banks that are reliant on fees and reliant on deposits, and drive them towards service, and drive them towards convenience, and drive them towards diversity of products so that customers really have choice, then the regulator needs to play its part. So I don't want this to come across as being negative. Quite the opposite. We've made amazing strides, whether here in the UAE or across SAMA and the Egyptian regulator and other markets, but we're only kind of 3 steps into a 10-step journey that we still need to continue on. The risk is a calculated risk, I hope. I mean, we speak to people like Vishal on a regular basis, and he's been one of the people I admire most in kind of the openness of the discussions and the frankness of what can be done and when and where. But we recognize that there are multiple complicated issues that have to be resolved before you can kind of open the doors wide open for everybody to participate. So it's a fine balance. I thank Craig for the work he's done, because I know, Craig, you went early, and man, did that take off a couple of layers, right? Or a little bit of white hair there, I see. But joking aside, I think people are walking in Beehive's footsteps, and obviously others, to kind of get us to where we need to be.
So do you think investors have an advocacy role? Do you think it's only investors to speak to the regulators, or is this the entrepreneur's job and we can have more white hair?
I absolutely believe investors have an advocacy role, because if we do our job right, we should be assessing market opportunities, both in terms of returns, but also in terms of customer benefit or customer value. And I think any regulator worth their salt would say their job is also to bring to market products or solutions or experiences that benefit the ultimate customer. They come at it from different angles. We come at it from a returns, they come at it from a risk mitigation and so on. And I guess that's where the interactions are important. So I do believe in advocacy. I believe it goes a little bit more than advocacy. I'll let Vishal comment, because some of our discussions are sometimes heated, right? About when is this going to happen, and give me a timeline, and because we're trying to make sure our due diligence is matched up. But the entrepreneurs ultimately are the torchbearers in my mind, right? They are the ones who can articulate the messages. We're just trying to be good investors and manage our investors' risks as appropriately as we can.
Got it. So, Basil, Now, say in the case of Beehive, now we know Beehive did long strides with the UAE regulator, but how would you be comfortable investing in, I mean, the idea of VC is to invest in scalable startups. How can we mitigate the idea that fintech startups unfortunately have to deal with different regulatory systems in every country they go to? And how do VCs perceive that? Because that's one thing that, I mean, you can buy fashion anywhere around the world. You can provide a SaaS solution for a company and that's not regulated, and that becomes global day one. And maybe that's also a question for Greg. From I'd love to hear Greg's perspective on it. But from the perspective of fintech, every single new country you go to, then you're dealing with a set of new regulations. So how does that factor in?
You know, one of the benefits or maybe silver linings of COVID-19 is we've all been on Zoom way too long, right?
Yes.
And one of the things I've seen from that is people are speaking to each other a lot more regularly and more often than maybe they had in the past when we were running around on planes and attending events. So the first thing I'd say is I'm aware that there are multiple conversations between the regulators across countries, and there has been reach outs on all sides between people trying to coordinate. But the regulator is jurisdiction bound, so we'll always take the jurisdiction first, and then, you know, looking for that. But it is definitely a big cost that when we think about, you know, a fintech that needs to be in multiple countries because of scaling, that means there's additional compliance, regulatory licensing, and things that they have to go through. So, you know, again, one of the goals should ultimately be to create some passporting abilities between countries, or at least allow things to move between one country or another. If you're regulated in one, be able to show up in another and immediately get the sandbox license or something along those lines. Again, I leave it to the professionals to decide, but it is a barrier. You know, Europe has done a great job with passporting, and we know, you know, a country setting up in Eastern Europe can you know, be able to tap into markets like France and Germany quite quickly because of the laws and regulations and so on. But the challenge is even greater than that, right? The challenge for me is bringing also the banks to bear, or the banks to the table. Ultimately, any fintech, whether it's Beehive or others, there's a certain level of capital requirements that will be needed for scaling. And I think having them and other sources of funding outside of VC, we look at the equity side of the equation, right? But even if I'm an equity investor, the fintech needs to raise debt, or needs to raise lending capital, or needs to finance working capital or float or whatever it is. And we know where the money sits today, right? We know it's sitting in the banks, and we know a lot of it's sitting at some of the, you know, lowest risk maybe, but also lowest return profiles for these banks. Surely there's room here to push that forward. I think Egypt, some of the stuff it's done with, you know, improving the amount of lending to SMEs, for example, and making banks have, you know, pushing microfinance and so on, has been a huge benefit to the country. And a platform like Beehive can easily, efficiently get that out and efficiently manage the risk of that capital. So there's lots of partnerships between fintechs and banks that still needs to occur.
Fantastic. I agree. So I would again want to remind everyone that they can post their pictures. Sorry, not pictures, their questions. No pictures, please. So actually, just before I open and present us with some of the questions that our viewers have left us, I mean, I want to ask that same question to both Craig and then Ken and Vishal. So Craig, from your perspective as a startup, as a fintech startup, how did you think of that when you even thought about Beehive, knowing that the regulation is going to be different with every time you grow?
Yeah, I think it touches on some of the points that Basil mentioned. You have to look at the market in its entirety to see whether you can build a sustainable business within that market. Yes, as you move market to market, there are additional costs that there wouldn't be if you were just creating some SaaS software that anybody could access anywhere in the world. So you have to build in the fact that there are going to be additional costs based on kind of regulations and compliance, etc. But it really comes then down to market size. So some countries you can't justify going into, because it doesn't make any sense. UAE is large enough. KSA is obviously large enough. So you look at those type of markets. Egypt is large enough as another example. So you can look at those and say, okay, that makes sense. There'll be some of the markets you look at and go, it just doesn't make sense. But I also want to pick up on another point that was just raised. And it really does come back to, I think, passporting or some form of passporting within the GCC or within the MENA region, or some kind of reciprocity between regulators, I think would be very, very useful. But in addition, there is fintechs, there are different types of fintechs. There are those that are providing technology to financial institutions. They just used to be called software companies in the past, but now they're called fintechs. Or you have companies that are financial operating companies that are using technology to disrupt delivery mechanisms or operating models. And it's for the latter that it's a lot harder when you look at, because they're the ones that need to be regulated. Software company doesn't typically need to be regulated to sell software to a bank. But there is the big opportunity, I think, to see more and more collaboration, because that's how you're going to get innovation, is to get the fintechs working more and more with the banks. But the banks have to come to the party. And one of the challenges within this region, I would say, compared to, say, Europe or the US, there's been a lot more collaboration in Europe and US between fintechs and banks. Here, there's still a bit more of the mentality of we can do it internally. And the problem with that, if they can do it, great, it happens. If they can't, it's another 18 months wasted, and then they're back to the drawing board. And it's about speed of when you're bringing those products to market. So it's a combination of a few things.
Okay. So actually, Ken and Vishal, it's a continuation to my question to Craig and Basil, but it's also a question that we've had. And it's a startup that says, one of our viewers, he says, if we come and set up in Dubai, would you help us get into other GCC markets? And so my question to you is it on the regulator to also, and do you guys feel like, I mean, what regulators generally do aside, is DIFC and ADGM looking on how to partner or to establish themselves as a stamp so that once a company is regulated in DIFC or ADGM, it's able to achieve that license? And is it something that both of you are looking to achieve, such partnerships with other regulators around the region?
Yeah, sure. Well, there are multiple networks, right? There is the GFIN that both Ken and me are part of, the Global Financial Innovation Network, which is all the regulators come together. Then you have in-house within the GCC, we work closely with FinTech Saudi, with SAMA, with the Kuwaiti CMA as well. And we work across different regulations. And the whole point is, if there is a FinTech that comes up to us and says, at least in our case, if they come and say, I need an introduction to FinTech Saudi, and I need an introduction to SAMA, I'm like, I can help you. I can show you the road. But it's up to you. You still have to convince them. They might have different risk appetites. They might have different risk models. They might have different risk mitigants. But the conversation and the dialogue is always open, more so than people perceive it to be, between regulators from different jurisdictions. And this is important. This is key, because we need to understand what's happening there as well. I mean, when we created our sandbox, it had just rolled out in the UK. So we had open dialogues with the UK regulator to understand what they used, what they did, and how they mitigate those risks. Basil touched on a very important point about open API. I know it's a little touchy subject right now for most regulators, but forget open API, forget open banking. Think of it wider. It's going to be an open finance. It's not just going to be for banking. It's going to be not just for people to send money, receive money, have an account, and get financially included. It's more about what can they do with the money. I mean, if you look at what the Monetary Authority of Singapore just did, and this is why I keep stressing on the fact that dialogue is important, they have just issued a digital banking license to an entity that is formed of a Careem and Etisalat. So you have Singtel and I think Grab that have come together to get a digital banking license. They have zero experience in the financial sector. I mean, they might be the largest players in their respective fields, but they have zero experience in the banking sector. Why would they get it? Why would they give a banking license to them? I mean, imagine if Etisalat and Karim got together and said, "Came to Central Bank of the UAE and we want to get a banking license." It'll be weird. But you need to understand it's beyond just financial services right now. It's the financial data that's passing through all these different lines of telecommunication networks. People have access to vast amounts of personal data, and regulating that data is going to be the next step for regulators across the world.
Thank you for sharing.
Yeah, add to that just a little bit, and certainly second that regulators are talking. We're talking to each other a lot more than I think a lot of the industry appreciates we are, and the GFIN is the perfect example of that. The whole idea behind GFIN is to help facilitate this process of fintechs engaging across borders. And for anyone who is looking at engaging cross borders right now, the cross-border test program is open for applications. Now, you do need to have a cross-border element, otherwise it in essence defeats the purpose of it. But if you are a fintech that is looking at a product that's a cross-border element, that right there is an ideal opportunity to have multiple regulators engaged at one time. Now, the passporting concept still does not exist because there are just numerous complexities to doing that. But the best we can get at it are agreements to collaborate and share information. And the GFIN is all about doing that. So we are certainly making strides in that way moving forward. Within the GCC, all of us do openly talk, and as Michelle said, helping to do an introduction is generally not an issue. Going that next level of say, helping them get to the regulator, that's just
not there yet.
Not there yet, and not necessarily an appropriate thing for a regulator to do. We're happy to share information if FinTech is okay with us doing that, because it's the complexities, but then there's data protection laws too that we have to be careful of, and those get very complex across borders. But the interest is there doing it and communicating. So we are working toward that. It's just not to the point where we can have global passporting yet. Europe is in a league of its own yet on that area.
Fantastic. So I'll open it up to some more questions. And just before I do, I'm going to push that poll for our viewers to answer within a few seconds. But I have another question from one of our viewers, and they're asking, what sort of support does a fintech startup receive in the UAE? So once registered and in one of the free zones.
Okay, may I take the first? How do you want to handle this?
Yes, sure. I'm happy to. Apart from having the chat with the regulators, I mean, across the UAE, you have multiple funding mechanisms available to you across different emirates. Again, you have to apply for these funding mechanisms, the different accelerator programs. I think as a startup, and going through an accelerator program is key. It's really important. You have Techstars, you have Plug and Play, DGM, you have the FinTech Hive in DIFC. Going through these accelerator programs is absolutely important. It kind of gives you the lay of the land, understanding what you need to do, who you need to partner with, be it the banks, be it the regulators. Everyone's listening in those conversations. Once you get past that, and once you understand, okay, fine, this is what I need to do, this is the target audience, these are the regulatory boundaries within which I need to operate, then you take those next steps. I mean, we connect you with the compliance people, we connect you with the lawyers, we connect you with the other regulators should they need to be involved. And again, at the end of the day, getting accepted into the funding mechanisms depends on the quality, right? It depends on the appetite of those people providing those funds, whether you meet the criteria that they're set up for you. It's easy. I mean, startups, you're not entitled. It's more, you need to show us why you deserve it as opposed to being entitled to it.
Yeah, I think that's a very important point. It's not a right, it's a privilege to operate a financial services business. And oftentimes there is a presumption on the part of startups that because they've come up with some new innovation that is believed to be of a benefit to the market, then they're automatically entitled to an authorization to operate. And there's a lot more to it than that. Assessing whether or not they're qualified to operate a business is step one. But as far as support goes, within the DIC there is an extensive support network for startup fintechs and fintechs generally. The DIFC runs a variety of different programs out of its FinTech Hive. There's an accelerator program, there's a startup bootcamp program, there's an accelerator program, there's a scale-up program. All of these are designed to introduce startups to incumbent institutions, provide mentorship, introduce them to funding avenues. There's a co-working space that gives them reduced costs for working space and offers them an environment to engage with other startups. We have the regulatory sandbox. When they get to the point where they're ready to become operational and they need regulation, the sandbox is an avenue if they fit the criteria of the sandbox program to enter that and receive some level of temporary flexibility in the regulatory requirements. There's a trade-off for that. It's a heavily restricted environment, and Basil talked about this a little bit earlier, that there's a trade-off for everything. You get some reduced cost of entering. It can be in some cases an easier route to entering the market, but then it can be a more difficult route to entering the market. So there is a lot of support. It really depends on the fintech, what they're wanting to do. The best thing is to reach out and engage. Contact the DFSA to see what you want to do, what's available. Contact the AGM, see if what they have makes sense for you over there, and weigh the different options. They're very, use the word complex again. We both have very complex ecosystems for fintechs.
Craig, if you would say from your perspective in one sentence, because I know we're running out of time, what were the values, real life, of registering in the UAE and the IFC particularly?
So for us, it's because we wanted to operate within the UAE. And so we wanted to be regulated because we wanted to operate in the domestic market. Also, it was the UAE in particular was ahead of any other jurisdiction within the MENA region, certainly when we were engaging. So that was the primary reason for us. I think it's what any entrepreneur needs to look at is just understand exactly what their business is. Does it require regulation? Or is it a technology solution? Therefore, they might just want to be based within a financial free zone so they can talk with potential customers and other people within the ecosystem, but they may not actually need to be regulated. So it comes back to what exactly is your business model and understanding whether you need regulation or don't need regulation.
Okay. So we have someone, Ahmad Dif, who is very keen on you coming to Egypt soon. So he's asking, when are you planning to come to Egypt as Beehive? And he's assuring you it's a big market and then they can help. He hasn't left any contact details. So
Egypt's an interesting market. We've looked at it on and off over a number of years. We were very close to going in actually with a multinational bank into Egypt as well. So I guess we just need to keep a watch on it and see if when the time is right for us. Really, we've got our hands full with KSA at the moment.
So one last question before we wrap up. Again, sorry to the regulators. They're getting a lot of heat. So what's the difference between the DIFC and ADGM? And how can we decide which to incorporate in? This was going to be heated.
Well, one's in Dubai, one's in Abu Dhabi. It just matters where do you want to live.
That's nice and simple. I like that.
If you're in Dubai, you don't want to take a PCR test, then maybe you'll stay in Dubai.
Nice one. Multiple PCR tests.
Yeah, that's an extremely difficult question, and it would take a long time to answer. Because I mentioned a moment ago, we both have very complex ecosystems for fintech support. The best answer to that is reach out to both and have a discussion. Reach out to the DIFC FinTech Hive. You can contact us as the regulator, talk about what the program's available, and then weigh the differences.
I can't say anything different. It's exactly that.
Can I add something to it?
Yes, please.
No.
Oh no. Watch out. No, listen, I think you got to sit down first and put your criteria on a piece of paper and understand as a fintech, what do you need to be successful? Regulation and licensing is a part of it, but also the capital, the addressable market, what solution you're going after and where it's, got the most potential, and then kind of weigh each other out. We do this regularly at Global Ventures, and and there is no one clear winner that's got it all. There's no one market. Today, Egypt is 100 million people opening up its banking system. It's a huge market. Revenues and so on are a lot smaller. Saudi is a big market, but very dominated by certain players, and the regulators is still a little bit coming up to speed, if you like. Bahrain is way ahead on regulations in a number of different ways, but very small market, very small, so on. I'm not going to comment on Dubai, Abu Dhabi. They're right here in front of me, so I'm not going to say anything. But each one, again, has its merits. And I think it's not hard, I think, today to really sit down and weigh the criteria, speak to people in the ecosystem, investors, other startups, and so on. And I think at least one or two will emerge as being clearly the place to be before you kind of just start chasing every application form on available online.
Wise words. So on that note, I'd like to thank everyone so much. Thank you for your time. It's been so much fun. I thank you for taking the time to be with us today, and hope to see you all soon. Craig, best of luck, and we look forward to seeing you in Egypt soon. And Basil, hope to see you. And Ken and Vishal, thank you very much.
Thank you.